Good evening, everyone. This is Rodney with the Triton Wave Market Timing Strategy for Friday, September 7th, 2012. So let's look and see what happened at the market today. I was expecting a 20-point down move over the last few days. We got a 27-point up move. The market actually started off 8 points, which was kind of like built into everything. And then there were some buy programs that came in that gave us this lift. The buy programs came in right about 14 and took us to 1431. There was most of this rally was short covering in a panic, and there was 739 million shares traded on the New York Exchange, which is 100 million more than it has been in the very slow markets. We still, if we look at this channel here, I'm going to squeeze this in and look at this. This channel that we established, that I originally recommended a short at the upper end of the channel. That puts us, and then it went sideways and sideways. The 8 was about to cross the 21. Everything looked good to the downside. So the waves were saying we're looking for a short or the downside, but we can never be sure of any kind of market manipulation, or in this case it was the ECB President Mario Draghi who came in and basically guaranteed short-term bond covering for any country who wanted it. So the people who buy the bonds have to agree to an austerity program. So we're talking about Spain, France, Greece, and maybe they will agree to the austerity program, maybe they won't. But right now, this is still within the channel, and the upper end of this channel that again goes back, as I've said in previous comments, goes back about a year and a half, is 1443 to 1445. I still believe that this is a spike up. I believe that once this balloon runs its course, the balloon's going to pop, and we're going to be right back to 1400 on the S&Ps. It may last 2 or 3 more days. It may not. We have the monster employment report coming out tomorrow morning. That may affect the move up, and frankly, I'd like just to see this hit 1444, up another 13-15 points, so it can get it out of the way and move its general course, which I still believe is a downward move. In the meantime, if you are short, there are a couple positions that I have that I still have. One I'm taking heat on, one's still okay. Let's take a look at Baidu. Okay, Baidu is almost, because the waves are heading down. T5 is down. T1 is heading down on the daily, and all the rest of them are either slightly above or below zero. T5 is completely below zero on the 21. So I actually picked up a little more Baidu today because I think this is going to hold the 8-period EMA. So I added to my position on Baidu. MasterCard, I decided, since the T5 on the daily was below zero and everything else was below zero, that it was worth holding on to, even though I am taking heat on it. So we'll wait and see what happens there. This may go up a little bit more, or it may start turning. Taking a look at Goldman Sachs. Goldman Sachs did make it through. I suggested that if it makes it through 207, it might make it up to 218 or 215 at the, let me see, that's a 377 exponential moving average. It's heading up there. Whoops. at 370 at in tomorrow's morning trade. I would take half off the table, let it rise up a little bit. My target at is 117 for right now. You can see the daily, the 21 minute is starting to move, is starting to roll over again a little bit on T1, T2, and they're plateauing 3 and 4 and 5, and they're getting very, very peaky. So I think from the look of the waves and the look of the price action, it looks like Goldman Sachs has run its course. Okay, looking at Netflix, I still like Netflix to the downside, but not quite yet. It has to come up. If we get a little more lift here to 58.37, and then let me see here. You should be half out of that when it hit 53.40, which was the low back in August, and the target still is the 1272 extension at 43.89. Nothing has changed on that, except that if you want to reload on the downside, T3, T4, and T5 on the 21 minute is still down. And so a move up to 58.34 on the would put us right about in here, which is where the 377 is coming into play. Okay, the only position I dumped today was Apple, because it looked like I thought it was starting to turn here, and it looked by the waves, if you move back a little bit, that they were starting to get a little bit top heavy, and I was looking for a move back to 650. Didn't quite happen. It was okay with the market for the first 2 hours, and then it popped up 5 points, and I decided to dump it. I did take a hit on it, but that's the name of the game. When this moves back below, when T1 moves below 0 again on the 21 minute, I will reload on the downside. GLD looks actually not too bad. Once it broke through the congestion at 157, you had a chance to get in when it came down and hit the 8-period moving average. And it did that, and then it took off like 4 or 5 points one day, went sideways a couple days, went up again today. I have a target of 170, which is, if we crunch this up, 170, 173. Gold is at a 4-month high. The GLD ETF is going to go with it. Now, even though T1 and T2 is moving below 0, it may just go sideways instead of down. I like gold to continue to the upside. I'm sorry, GLD. Looking at Google on the daily, popped up 19 points today. It took out this overhead trend line that goes back to December of 09. So that is very, very significant. If you were playing this as a bounce off of the trend line, you were caught with your pants down. So that's why you have stops in place. You always need, every time you make a move in either direction, you need a stop to get you out if it goes against you. And this opened up, let me see, 8, 12. This opened up 6 points. It ended up 18 points. So it was plenty of time to be stopped out. If it got through any of these highs. And lastly, let's look at Amazon. It just seems to be moving its way up slowly but surely along the 8-period moving average. I don't really have a target on this, except it may actually moved up to a 272 extension. Let's put a fib chart on this and use October of 2011 as the top and the base of December 2011, and we get a 1272 extension at 268, which is entirely possible. It's about 15 points from here. So if it hits that target, it would take at least half off, maybe 3/4, and let the other quarter run. And trailing stops all the way. If you were day trading the S&Ps, if you looked at the 1597 tick chart, there was a clear move actually at 8 o'clock in the evening when Europe opened, and it took you all the way into about 11:30 Central Time, and it basically went sideways from there. So any move from a day trading perspective, T2 would have to move above 0 for you to get back in, because T5 is still above 0. Well, that wraps it up. I hope there are not too many more surprises in the market, and that they resume their wave formations. Good luck trading, and I'll see you at the next update.